Hello everyone, welcome to Bettertech. So today we have Adriaan with us. Adriaan, welcome to Bettertech.
Thank you. Happy to
So
be
first
here.
of all, yeah, pleasure to have you. So first of all, thank you very much for taking your time out and talking to us today about fintech in general and your experience with that and what your thoughts really are. So as a start, why don't you go ahead and let us know and the audience about who you are, what you do, what's your role, and your experience in general.
Sure. My name is Adriaan Brouwer. I grew up in the Netherlands, currently based in Amsterdam. I have an entrepreneurial background. I think from a relatively young age, I've always built different businesses, both nationally and internationally. Actually, after my study at the University of Amsterdam, I moved to Ghana in West Africa, and I had this idea in mind
Mm-hmm.
to build an entrepreneurial empire there, which is obviously a very brave ambition because I
Yeah,
also
for
hit
sure.
hit the wall and also failed a lot of things I was doing there. But overall, a lot of things learned and a lot of things that went well as well, and great experiences that I took along when I moved back to the Netherlands. When I moved back to the Netherlands, I think that was a little more than 3 years ago. I founded my first Dutch startup, which was initially Fund Me Up, a platform for the tokenization of assets
Mm-hmm.
in startup shares. We pivoted into a more of a traditional marketing model, as in community-driven finance marketing, helping companies to do their community-driven finance rounds. But however, a little over a year ago, I decided to leave that all behind and focus on Fairnance, which I founded, co-founded together with my co-founder last year, which is also in fintech, in home finance to be particular, which I think we will be talking a little bit more about today.
Sure, sure.
And yeah, so I'm now currently co-founding that business. We have raised 2.35 million in pre-seed last year, euros.
Mm-hmm.
And we're now, working to build that product and to get it to market.
Awesome. So, Adrian, in general, there's a lot of hype around fintech. So, fintech is sort of one of the few buzzwords these days, which are, all around us. So, it's AI, machine learning, blockchain, etc., etc. And then fintech is also on the bandwagon. So, for our audience, can you briefly tell us, like, what do you think fintech is, or what fintech is all about?
Yeah, so yeah, I think interesting question, because I think the term has been misused in a lot of contexts. Because what I think what it actually should do is that you have, for example, you have a financial product, and it
Mm-hmm.
starts with solving a real problem, and the technology is almost in all cases an amplifier. There are some cases where the technology is in itself a core. So let's say you are building a SaaS product to help other fintechs to solve certain technical problems, then it's not the case. But in almost every case, you have a real problem you're solving, like a general problem that has a large market, and you use technology to scale it, or you use technology to bring it to a larger audience. I think that should be the core at what fintech stands for. Yeah, so that will be my answer.
Sure. So we also saw that our buying patterns or our buying behaviors during the pandemic basically got changed, right? So we were more into contactless payments than contactless deliveries as well, right? So
Yeah.
our spending basically took a shift. More and more people were sort of ordering online. So now that we are moving towards like post-pandemic era, do you think that this trend will continue, or you think that we will be back to the basics and it would be more towards like an in-person retail or like a cash-oriented economy again?
No, I think there's actually the pandemic showed us some things which will be there to stay, at least in a hybrid model.
Mm-hmm.
I think particularly with contactless payments, where you have been talking about, there's a huge incentive from governments and states to have this to stay. It's for them. It's a huge incentive to have a cashless society for several reasons. political reasons. So I think that's definitely there to stay, whether you're in pandemic or not. But I think what is really, and it's not necessarily related to fintech, but more into tech in general, the pandemic has opened up some new channels, so to say,
Mm-hmm.
which will be there to stay. Obviously, the biggest example of that is remote work, in which we are
Mm-hmm.
way more comfortable with just scheduling calls and discussing things, not always coming together. But I think another example, at least in Europe, what I've experienced, which not many people talk about, is the opening up of the channel WhatsApp. So what I
Mm-hmm.
noticed when we moved into the pandemic, WhatsApp became way more of a viable channel because now everybody was at home. They were grabbing their
Mm-hmm.
phones more often. They had to communicate more with their coworkers or whatever. Not everything is done via email, and I think
Mm-hmm.
the pandemic has made a confluence of private and public, like your private life and your work
Yeah.
life, which I think is not necessarily bad because I never really believed in a kind of 9 to 5 setup.
Mm.
So there's more of a confluence there in doing things on the multiple because we're working from home, you're taking care of the children, and then you were hopping back on a call, whatever, or having some quick texting engagement
Sure.
with your coworkers. So what I have noticed in the pandemic is that the channel WhatsApp for reaching out for whoever, so that's more like reaching out for business development or partnerships or investors or any of that sort, WhatsApp has been really fruitful to me because everyone
Mm.
was on the channel. So I think apart from just fintech in general, there's some things that I think these are some nice inheritances from the pandemic, if you can phrase it that way.
Yeah, I mean, we have seen quite a mm, bit of shift. I mean, online shopping is sort of getting very much normal. People of old age, even, they are getting comfortable with having their credit cards, debit cards into online portals to get shopping. So yeah, I mean, there is certainly a shift towards that. And as you said, I mean, it could be a hybrid thing in the future where, I mean, it's a mix of both the worlds, contactless payments, cash-based payments, both can go hand in hand. So in the introduction, you talked about Fairnance. So can you talk to us a bit more about what that is and maybe guide the audience what this concept is all about?
The concept, sorry, it was a small interruption. You mean the problem Fairnance is solving and the concept of
Yeah. So
Fairnance?
yeah. So what Fairnance really is and what it is all about.
Sure. Sure. So Fairnance, we are solving a problem that affects a very large group, and we are, our beachhead market will probably be the Netherlands. At least that's what we're focusing on right now. And there's a very large group of people that are
Mm-hmm.
excluded from home ownership, and they are
Okay.
excluded from home ownership for non-financial reasons. And I say
Mm-hmm.
non-financial reasons explicitly because these are people that can permit or like they can afford the costs that come with acquiring a home, but the conventional mortgage model doesn't work for them. And to elaborate a little bit on this group, you can maybe divide it into 4 subgroups. You have the young starters in cities who can afford a high cost of living, who are already paying a very high rent, but do not get enough loan capacity when they apply for a conventional mortgage.
Mm-hmm.
You have Muslims who are who wouldn't like to take a loan which includes interest payments because it's interest is not permitted in Islam. You have entrepreneurs who have more or less the same problem as the young starters in cities. They do not get enough loan capacity. And you have a fourth growing group, which is really interesting because these are risk averse people that are very reluctant to buy because they don't want to face 100% of the downside risk that comes with buying in a conventional mortgage model. So what we are building for them is a product that allows them to buy on ownership, on the basis of ownership instead of debt.
Mm-hmm.
So they are,
Mm-hmm. Okay.
instead of taking a loan, they are buying what we call fractionalized home equity units over time. So there will be a balance between, okay, the homeowner owns, let's say, 5% and Fairnance at the beginning owns 95%. And then the homeowner would buy more fractions over time. And during
Okay.
that
Okay.
period, so you're co-investing in the model. We call this the co-investing model. And during that period, obviously the home buyer is living in the property, so he's using it, and he's paying Fairnance, the other owner in the same asset, a user fee or a rent, if you like, for that.
Mm-hmm. Mm-hmm. Mm-hmm.
And I think that's the problem we are solving on the demand side of capital, on the demand side of money, if you like. On the supply side, we are also providing great value to institutional investors. So think of pension funds or insurers that are have a lot of long-term liabilities because they have a public function. You have to have long-term liabilities to meet, and we are, actually using the demand side from home buyers to
Mm-hmm.
pull that demand together and use that to generate a new asset class or unlock a new asset class for institutional investors, which is single-family residential, single-family real estate, which is a good asset for them because it's has a high risk-adjusted returns, safe cash flows, low risk, low volatility, a lot of things that suit institutional investors. So you could see, just putting a very long story short, there's two sides of capital. So you have one side, you have home buyers that need financing in a certain way, and you have on the other side, you have institutional investors that want assets that perform in a certain way. And we are building we are facilitating the link between them. So we're building the infrastructure to facilitate the direct link between them, and that's where we provide value. That's
Right.
very nutshell what we do.
Yeah, certainly helpful. So, I mean, Fairnance, as the name might suggest, I mean, it's basically fair financing, as we call it, right?
Thank
So,
you. Yeah. So we it's great to see that you pointed it out, because that's actually, we see it as our mission to strive towards fairness in finance. That's like an
yeah.
equitable financing relation, but also the fair, so the four letters, they also actually explain our product because it's flexible, it's accessible to a large group of groups, it's inclusive because it's inclusive to all cultural groups, and the last one, which is very important, is risk sharing. So we share risks,
Yeah.
we win together and we lose together. So if the property is sold, let's say the property is sold 10 years in and the home buyer owns 40%. Let's say the property is sold and there's a capital gain. We sell it with regards to our percentages. Let's say there's a loss on the sale, then we share the loss as well. So that's a very important factor that makes it very attractive to this group of excluded home buyers.
For sure. Yeah. So, yeah, that further explains the concept of fair and finance. So, yeah, thanks for that.
Exactly.
So
Yeah.
also, Adriaan, in the recent years, what we have really seen is that the VCs are basically funding a lot of fintech startups, right? So we have seen like billions of dollars investments going into fintech startups, or the sector in general having more than 100% growth. So do you think that this particular trend will continue in the future, or you think that there will be cut downs due to recession maybe, or other factors, or you think that it's pretty much, I mean, hit the wall?
I think it will certainly be affected by the recession. And I think there's a delay in private markets with regards to public markets. So what you have seen over the last years, and I think also in the pandemic, governments, by decreasing rates and QE, and they've made capital so cheap. And what happens, of course, when there are negative interest rates, then there's more capital that is now searching for returns. So there's more capital being poured into high risk assets, such as startup financing and tech stocks in general. And what I learned from, I don't have a history in fund management, but I know quite some experienced people, and actually my co-founder is a very experienced fund manager. What I learned from them is that there's always a delay from public markets to private markets. So my take on this is that in 3 to 6 months, you will definitely see, I think you're already seeing the cracks of that, but you will definitely see a very big haircut on startup valuations in fintech as well. So in tech in general, but definitely in fintech because they were sky high. So there's going to be a time when you're raising money in a pre-seed or a seed round, and you say like, we're raising at a 10 million valuation in a seed round. That investors are going to be like, no, this is not 2021 anymore. We are not going any further than 5 million. So I think this is definitely going to happen. It's just demand supply, right? How cheap, how available is capital? I think it's the macros that affect this.
Sure. So do you think that it's a good time for a fintech company to to get started? So for example, if someone has an idea which is related to fintech, do you think it's the right time to maybe pursue that idea, or should there be some wait? I mean, what are your thoughts?
No, I think I learned from entrepreneurs who I inspire. So some of our local heroes in Amsterdam, for example, and they always tell me never let a good crisis go to waste. So
Mm-hmm.
definitely do not. I would advise any founder to not let it to not delay your dream or the problems you would genuinely like to solve. However, there's going to be challenges in fundraising, and especially going to be challenges at fundraising at high valuations, which I think is not necessarily bad, because what we have seen in 2021, honestly, it doesn't make sense as well. You have companies raising 5 million pre-seed at 20 million pre-seed valuation
Mm-hmm.
based on a deck, and two people with not even relevant domain experience or whatever. So there's because there was so much money around in the VC space, I think there have been a lot of very short fundraising cycles, like VC funds aping in because
Mm-hmm.
they felt FOMO. And now there's going to be a time, okay, who is really distinguishing himself or by uh, solving big problems, by solving big
Mm-hmm.
issues, and also showing the capability um, um, to be efficient, capital efficient in your journey towards it. And I think me, I'm Dutch, obviously. I think Dutch is what one of the stereotypes of our culture is that we are really, how do you call this in English again? We are stingy almost, so we don't like to spend
Mm-hmm.
money. So what really changes us from Americans, they're like, yeah, we spend on growth, spend on growth, spend on growth, spend on growth. I think that will be more challenging in this environment. And if you're more Dutch, like, okay, we have to turn every euro or every dollar around and think about like, hey, are we spending on the right things? Are we moving on the right things? And are we not wasting enough? And are we, heading towards, revenues or profitability soon? I think this is this in a combination with building capacity. That's what your focus needs to be.
Right, right, right. So, I mean, do you think that in the coming days, fintech space will get overcrowded? I mean, quite a lot of companies, I mean, calling them fintech startups or I mean, fintech divisions of banks or other large corporations are going to come into the mix, and then it's too much crowded market. Do you see it happening, or you think that it's pretty much stable?
No, what I've seen happening for a long time is crowded in certain aspects. So I think there's a lot of neobanks. I think there
Mm-hmm.
are a lot of payment solutions, which are all sectors in which you have a couple of giants and a lot of dwarfs, right? Um, and I think
Mm-hmm.
that is challenging, because then you have, you're all chasing the same cookie, and there's you're a lot of them are fighting about the crumbs, and there's a lot of big ones that claim it. So I think there's some
Mm-hmm.
certain aspects that are overcrowded. So for example, if you look at Money 2020, I think the event was last week or the week before in Amsterdam. you know I think 80% of the people there are payment providers, and I'm like, okay, how many
Right.
payment providers, how many bridges do we need? That being said, though, in emerging markets, so let's say in Africa or whatever, the cross-border payments or remittances, this is
Mm.
still, there's a lot of space available there. I would say.
So banks, I mean, you touched upon the topic of payment processor, payment methods, etc., and banks certainly come into the mix. So banks typically, what we have seen in the past, are basically slower on getting themselves upgraded with the technology, especially in the fintech space, or like having their own wallets, or having sort of, I mean, micro loans, or I mean, other sort of instruments there. So, do you think that in the upcoming years, if banks they don't upgrade themselves, and then they're going to lose on the fintech side, and other players in the market will catch up, or do you think that it will be fine keeping the traditional way?
Uh, yes, definitely. I think they will lose out. Short
Oh.
answer. But then I think that's also, it touches upon where I think the opportunities are in fintech, and that is, in my opinion, in disintermediation of finance. So
Mm-hmm.
similar to what we do, like I explained, like we link up aspiring home buyers that want financing in a certain way. We link them up with investors that that have the capital that wants assets that these home buyers can unlock, right? And that they want them at scale. And I
Okay.
think a great example of that I read last week, I think it was in TechCrunch. I read about a huge round raised by a UK company called Kodat. And what they do, they provide lines of credit or financing to SME companies. And what they do, they aggregate data from SMEs with their technology. They can just use that aggregated data to give a certain credit rating or whatever, or financial ability of these companies, and then pool them together and give that as a proposition to institutional investors, and to have them to unlock a new asset class for them, SME finance. Because an institutional investor would love this kind of asset class, but there's no conventional way of creating that asset class at scale. Same thing applies for, I think, another company I saw in a Ghanaian company called Float. They also raised a round recently. Same thing. So they are aggregating data from companies in emerging markets that have traditionally very tough access to finance in their conventional institutions, aggregating the data and using it as a compounded asset to institutional investors that like the risk return profile that comes with it. So anything disintermediation in finance, I'm bullish. As long as it makes sense and you're solving a great problem, I'm bullish on that. And what is the direct result of us moving to disintermediation in finance, to building infrastructure that connects investors with asset classes or with people in need of funds directly? The direct result is that there will be no use cases left for the bank. So I think as we move more on technologies that can facilitate disintermediation in finance, there are no future technologies that banks should hop on, because there are no futures for banks. Is that, I'm not a conspiracist that hate banks or whatever, but I just really see happening that we create disintermediated structures without a bank being in between.
Sure. So you touched upon the topic of investing, and you also talked about the startup. So in many cases, startups, they want to keep themselves running and be in the business. In some cases, startups, they actually want to be acquired by someone else, right? So, and investors, sometimes when they invest into a particular startup, they also are looking towards what an exit strategy could be. So is there going to be acquisition of the startup, and what the return they are going to get, right? So in your opinion, in coming days, do you see fintech startups being acquired by the others, or do you see that probably they will have their own runway? What do you think? How do you see the fintech future?
Well, if there's really going to be a tough recession, depending on how tough it will be, obviously there will be less acquisitions, right? Because people are moving less around. But money is moving. There's less money moving around. So that's something you would see happening. But like I said before, when I quoted, I think it was Jochem Verheul, actually, an entrepreneur from Amsterdam, but he said, never let a good crisis go to waste. I think there's a lot of companies that are seeing, okay, there's certain things happening. For example, the example I just mentioned of Kodat, the SME financing bridge, and they see this happening, and they think, okay, this is going to eat into our market. We need to move now. We need to move now and acquire this product, or acquire at least the capabilities to facilitate the same product. So the crisis is, I'm not saying a crisis is imminent, but if there's a recession coming, which I think at least there will be at minimum a small recession, there is there's also lots of opportunities for people to show how problems can really be solved. That's my end of things, and then it comes with it that there's companies or funds wanting to buy into this and acquire.
All right. So do you see fintech also solving social problems? The one Fairnance that you talked about, it's really solving a social problem, right? So do you see other startups or fintech in general solving social problems as well by enabling more and more people in the financial technology space, or do you think that it's too good to be true?
No, I think that's definitely the case, and it should be the case. I think we really need to ask ourselves constantly, okay, why are we doing this? And if I look at why I'm doing this with Fairnance, is that because, obviously I want to fight the inequality gap that's deepening because of housing. Housing is one of the biggest issues in this, because you get a world with only people who rent out or people who rent. And I think, we are fighting to close this inequality gap by making it more accessible to a wider group of people. And if you would ask me 10 years down the line, okay, hey, that finance venture of yours, was it a success? And I could tell you, okay, we have shown the world that there's an alternative to debt-based, interest-based, I would say, unfair
Mm-hmm.
financing structures, which only make the certain group richer and another group, less well off. And it's also very hierarchical. Sorry, my English has gone hierarchical, or how you would pronounce it. So I think we always need to ask ourselves, what is the higher goal I'm trying to achieve here? And me personally, what I think, I don't want to kick on entrepreneurs who just say like, yeah, I want to make a lot of money. But I always think, there should be a deeper mission behind it. And the mission is always going to be social or ecological or anything that benefits mankind. Otherwise, why are we doing it? Are we only doing it because we want to build a company and make a quick exit and then chill in the Bahamas? That would never be. I would never like a world like that.
Right. So yeah, I mean, I'm pretty much done with all the questions that I had for this one, but I would like to hear what your closing remarks are.
Oh, closing remarks. Do I have any? No, I just hope. I'm not sure. I don't know that much about your audience and who listens to it. It would just be great that if there are any entrepreneurs or actually companies out there that are really striving to do something different and solve real problems, which I think I mentioned a couple times in the podcast, then go for it, do it, and don't worry too much. At least worry a little bit, but go for it. That's what I hope
Yeah.
to
So
have to give to someone.
yeah. So talking about the audience, I mean, it could be students, it could be young entrepreneurs, it could be startup founders, investors, it could be technology professionals. I mean, it could be anyone, because at Bettertech we actually have a very vast audience who actually listens to the speakers and guests that we invite on the podcast. Just, I mean, great people like you. So Adrian, thank you very much again for your time
You're
today,
welcome.
and I
Thanks, you as
really
well.
enjoyed the conversation, and I hope to host you again with a different topic sometime in the near future.
Sure, let's do that. Thank you very much.
Thank you very much, Adrian. Bye.
Okay, bye bye.